Trading doesn't have to be complicated. Let's simplify it with a powerful and easy to use indicator called the rate of change percent. We create a rotation strategy that is all about riding the momentum of winning investments while avoiding the weaker ones. It's simple, effective, and backed by data. Hi, welcome to this episode of Trading System Lab. What is the rate of change strategy? Think of a horse race. If you had to bet on the next winner, would you pick a horse randomly or choose the one that's been consistently winning the last few races? You'd probably go for the consistent winner. Let me quickly show you how to create a rotation strategy. First thing we want to do is go to New Strategy, Rotation. We change the rate of change, we change the parameter or the period value to 3. I only want to hold one symbol since I only have 4 ETFs in it. I want to take the highest value and use monthly data. Let's go to the strategy settings. We use my portfolio, AA. Then we go to monthly data. And we're not saying all data, we say the most recent 23 years. That's the SPY, and we say position size is based on the closing price. So that's about it. Let's run it and see how it's been doing. Yep, and here we are. It's been doing extremely good. At the end of every month, rank the 4 ETFs based on their 3 months performance. Invest all your money allocated to this strategy into the ETF with the best performance. Repeat the process every month. While I'm showing you in the background how you can create your own portfolio, I want to talk about a little bit about the 4 ETFs that I was using. In this example, it's the EEM, which focuses on fast-growing countries like China, India, and Brazil. The EWJ, which invests in big companies of Japan. The QQQ is all about tech companies like Apple and Microsoft. And the TLT, which focuses on long-term US government bonds. On the left side, you see the monthly results throughout the years, an average profit per month of 1.27%. If you want to check some seasonality, you can group the months. So you see the only losing month was actually October. All other months were profitable with this strategy. The yearly result looked extremely good, except 2022 with a loss of 26% during a widespread market turbulence. Here look at a sheet that shows all monthly results and the benchmark annual results. Why does the strategy work? The strategy succeeds because it follows momentum. Investments that are already performing well often continue to do well. This is supported by research showing that assets with strong momentum over 3 to 12 months tend to outperform in the following term. How to improve the strategy? While the rate of change strategy is already effective, you can tweak it to adjust to your style. You can test different time frames, expand your ETF pool, or apply it to a portfolio of stocks. You can add additional conditions and drag them into the rotations settings box. Interested in learning more? Watch the other videos of Trading System Lab. If this guide helped you, share it with your friends or comment below with your ideas. Do you have your own strategy? You want me to test it? We'd love to hear about it. Start testing today and see how strategies can give your trading an edge.